Good afternoon. Welcome back to the afternoon sessions of the 5th Belt and Road Conference of the Law Society of Hong Kong. My name's Hin Han, and I'm a council member of the Law Society of Hong Kong. It is my pleasure to facilitate the afternoon sessions today. Without further ado, let's now begin our discussion of Session 3, titled Towards a New Global Currency to Reduce Barriers to Trade. The panel discussion will focus on whether we can increase trade along countries that are part of the Belt and Road Initiative as we discuss the deployment, development, opportunities, and challenges of designating or using a new global currency and the role and the use of crypto, digital currencies, DeFi, DAOs, and blockchain technologies. If you have any questions for the speakers, please do write your questions on the question slip in your folder. If you're joining online, please type your questions on the Q&A box. Please join me in welcoming the moderator of this session, Mr. Christopher Yu, the Vice President of the Law Society of Hong Kong. Joining Mr. Yu for this discussion, please welcome Miss Elena Ivankia, the Vice President of the Russian Federal Bar Association. She's joining us virtually today. We also have with us Mr. Eddie Tam, MPPM, who's the CEO, CIO, and Portfolio Manager of Central Asset Investments. We also have with us Dr. Stephen Wong, Senior Vice President and Executive Director of the Public Policy Institute of our Hong Kong Foundation. Thank you.
Distinguished guests, welcome back. I hope you all had an enjoyable lunch. We had a very insightful and thought-provoking morning on regulation of metaverse. This afternoon, we turn to something more practical and relatable. Let's talk about money. There are 149 countries in the BRI, and they accounted for over $11 trillion of trade last year. According to a recent IMF report, there is an ongoing trend of decline in the use of US dollar in foreign exchange reserves and in trades. Is the world moving towards a new global currency? In this session, we will discuss the deployment, development, opportunities and challenges of designating or using a new global currency to facilitate international trade along the Belt and Road, as well as the role of use of cryptos, digital currencies, DeFi, DAOs, and blockchain technologies. As an international and modern city, Hong Kong also attaches great importance to this topic. The Hong Kong SAR government recently issued a policy statement on the development of virtual assets and virtual currencies in Hong Kong. The statement sets out the government's policy stance and approach towards developing a vibrant sector and ecosystem for virtual assets and virtual currencies in Hong Kong. This demonstrates our government's vision in supporting the development of this newly emerged medium of property. Hong Kong, supported by its robust infrastructure, internationally aligned regulatory regimes, a full range of financial products, and free flow of information and capital, can provide a flexible but predictable, market-oriented, and internationalized business environment to global investors. Just 2 months ago, Hong Kong was ranked 4th globally in the Global Financial Centers Index report published by Zhen Yan, which is a think tank based in London. With Hong Kong's policies advantage, rich talent pool, and robust legal system, Hong Kong is certainly a hinterland for development of virtual assets and virtual currencies. Today, we have the pleasure to be joined by other jurisdictions along the Belt and Road to study this topic of mutual interest. I have the honor to introduce to you our distinguished speakers on this session's panels. The first up is Ms. Elena Avakian, Vice President of Russia Federal Bar Association. Elena has extensive legislative drafting experience, including working on governing the capital markets sector, corporate relations, insolvency procedures, commercial litigation, and more. She was repeatedly involved in drafting the decrees of the Presidium and Plenum of Supreme Arbitrage Court of Russia. Elena is an active state councillor of the Russia Federation, second class. She was awarded the Russian Judicial System Honorable Charter and is commended by the Court of Intellectual Rights. In 2020, Elena was named Woman of the Year at the European Woman of Legal Tech Awards. In 2021, she was included in the Best Lawyers rating. Please put together your hands for Elena. And Elena, the floor is yours.
Thank you very much, dear colleagues. It's a great honor to have a chance to speak on this forum. But as I'm starting, I think that I will try to ask questions, not give answers, because nowadays on the floor of cryptos and CBDC, there are more questions than answers. But anyway, speaking about global currency, we have to first ask all of us a question, whether we need a global currency, whether we need something to replace the global currency that already exist, or we need something else which we have to plus to these global currencies, or we need something that will replace currencies as it is, and we need something that will be universal currency. Can it be crypto? Can it be something that will be the currency of public confidence? Or we need something that will be fiat, as all our currencies are now? These questions we have to discuss today, because without answers on this question, we can't find out the way. Why we need new global currency? Why we need to find out some other ways than we have today? Because the first question of all cryptos is a question of expenses. Today, our banking systems, all banking systems of the entire world, just prove their weakness. And the situation around Russia, the situation around sanctions and all this mess up that's going on today just proved the weakness of banking system, proved the weakness of ordinary institutes of banking regulations. In this case, we're going to find out the way that will give us a chance to establish the new transparent and normal system that give us a chance to make a global exchange, that make us a chance to pay in every time without influence of that or this country, without pressure of these or that countries. In this case, the way out from this situation is some sort of cryptocurrency. The question for cryptocurrencies, first of all, that the cryptocurrency is a currency of public confidence, and nothing except public confidence give the crypto their own value. There is no other value except public confidence. And if public sentiments just change their current, cryptos became just a piece of digital paper. In this case, we need something else. What is this something else? Is it CBDC? CBDC, what is this CBDC today? It's a digital currency of central banks. It's a real fiat, digital fiat. It's only another way to provide, nothing else. It's just the same fiat that we have now. In this case, it doesn't matter what is it, a digital ruble or digital dollar, or digital yuan or digital Hong Kong dollar. It's fiat of Hong Kong, Russia, United States, and so on and so forth. In this case, digital currencies, they have the same illness that the normal ordinary currencies have. So starting our discussion, I just want to find out and answer the question whether we really need something else except our global currencies that have already exist, whether we understand what these else have to be. Thank you.
Thank you, Elena. Also on our panel today is Mr. Eddie Tam, the founder, CEO, and CIO of Central Asset Investments. He oversees the management of the firm as well as the firm's CAI Global Funds. Under his leadership, the CAI Global Fund was ranked the first on best performing multi-strategy hedge fund globally, according to Bloomberg and Barclay Hedge in 2013. Eddie has over 30 years of experience in the financial industry and was credited as one of the pioneers in Asian equity derivatives, previously heading the derivative sales and marketing at Credit Lyonnais and Merrill Lynch. And in 2010, Eddie was named one of the 25 most influential people in Asia hedge funds by Asia Investor. Please welcome Eddie to our panel. Eddie has a PowerPoint. Yeah. Thank you.
Yeah, thank you. Thank you, Chris. Thank you for inviting me to join this distinguished panel. I'm quite traditional, and I'm very facts and data driven. So I'll share with you some of the current situation, and then we can proceed and think about the future. So I think it's undeniable that the US dollar is still the dominant global currency. It accounts for roughly 60% of global reserves, about 39% of trade settlement. Most importantly, in FX trading, around 90% of FX trading in the world, one of the legs is US dollar. So if you convert from, let's say, euro to yen, normally you go through the US dollar first, and then you convert to the yen. So it's tremendously convenient. The transaction costs are lowest. And this is quite remarkable, because if you think about it, the US economy after World War II was roughly 50% of the world GDP. And now, with the rise of China and the development of the rest of the world, now US GDP is less than 25%. It's like maybe 23% in nominal terms of the global GDP. China, in nominal terms, is about 16%. In PPP terms, actually, it has already exceeded the US back in 2014, 2015. So that actually poses the first question. Why is China's nominal GDP so much smaller than its PPP GDP? So that implies an extreme undervaluation of the yuan, of the renminbi. So anyway, the point is, given the demise or the decline, not demise, I guess, right? The decline of the American economy's size relative to the world, why has the dollar remained dominant? So there's got to be some reason for it, right? So, and to think about potential challenger, I think the two most obvious ones are probably the yuan, given that China has exceeded the US already in terms of real PPP GDP. And the other hot one to discuss is, of course, like various kinds of cryptocurrency, I guess, including various CBDC efforts by different governments. I'm not going to talk much about the yen or the euro, because I guess you can roughly say that there's in the Western camp. So anyway, let's look at a little bit more data. So, despite all the talk of the coming demise of the US dollar regime, the dominance, but of course this year in particular, because of various reasons, including the war in Ukraine and, slowdown in China and other reasons, the dollar has surged to a value which is the highest in the last 30, 40 years. Of course, there's also the reason of the Fed raising interest rate, and it's relative to the actions of other central banks, which have been slower, more modest. In fact, China is the only major economy which has been trying to ease. So the PBOC has actually cut interest rate and cut reserve requirements. So anyway, the evidence is on the table. It's very clear. The dollar is not going away. It's not collapsing, sorry. And this is just confirming my point. Maybe along the Belt and Road, it's used and the percentage of reserves has declined a little bit. I think mostly because Russia in the last few years has sold almost all its US dollar reserves and switched to renminbi. So I think along the Belt and Road, maybe there's more evidence of declining use of dollar. But globally speaking, not the case at all. And this shows you in nominal terms, China's GDP is still second in the world, but in real terms, in PPP terms, PPP stands for purchasing power parity. So it's kind of like the real purchasing power of the yuan. Based on that, it already exceeded the US a long time ago. So the question again, if you think about it, is why is the nominal GDP of China still lagging the US? In fact, last year, it closed the gap a lot. Last year, China's GDP was 77% of the US GDP. But given the depreciation of the yuan, and also actually this year, China's growth slowed down, and also China's inflation is lower than the US, right? So this year, the nominal GDP of US has once again widened this gap, its lead over China. So likely this year, China will fall back below 70% of US in terms of nominal GDP. So I think it's a bit sad, actually, to be honest. I think, everybody talks about the WTO moment of China in 2001. After joining the WTO, of course, China grew by leaps and bounds, and, we caught up very quickly. I think a few years ago when the renminbi got included into the IMF's SDR basket, that was a financial WTO moment. And then following that, the A-shares index also joined the MSCI Global Index, and the funds and the bonds joined the Barclays Index and so on. But unlike the industrial WTO moment, China basically failed to capture this opportunity and promote and didn't catapult basically the yuan into a greater and more important position. So despite the fact that like SDR gave the yuan over 10% weighting in its basket, like I said, I think globally almost no country other than Russia has a weighting of more than maybe 2% in renminbi. And again, similarly, like MSCI gave A shares together with Hong Kong and the ADRs listed in the US. I think well over 10% weighting. But given everything that is happening, it's underweighted by at least 300 basis points and likely to decline. And also likely MSCI will, because it's shrunk so much, the Chinese equity market, so it would likely reduce the weighting in its index next time, actually, fairly soon. So I don't have much time. We can talk more about this, but I think to come back to answer my own question, why is the yuan failing to challenge the dollar? I think mainly it's because we have a closed capital account. So when you have a closed capital account, people don't find it that useful to hold the yuan, so they underweight it. So therefore, it's undervalued. And this is also a source of international friction with the rest of the world, because China runs trade surplus with well over 100 countries around the world. It's not just the US or even Europe. It's really with most of our trading partners, we run significant surpluses And that's a bit of an issue. And recently, of course, people are reducing weighting in China even more. Let me just skip forward very quickly. Just 2 seconds on crypto. Of course, actually, last 2 days, if you've been following the news, the collapse of FTX is very important. And so there's a contradiction. Crypto is not the solution to every problem, to be honest, right? It's meant to be decentralized finance, but I don't know whether you're aware or not, but exchanges such as FTX or Binance or Coinbase, they're what they call CDFI. It's called centralized, decentralized finance. It makes my head spin. In fact, it's a fallacy. If you think when you trade on Binance or FTX that you are actually trading the crypto directly, it's not. The only time they update the blockchain is when you deposit and when you withdraw, because there's so many transactions and blockchain technology is so inefficient, they cannot update it every time. So all the trading activities on like Binance are recorded only on Binance's own servers. So therefore, it's actually vulnerable to hacking. And with the demise of FTX, actually, the DeFi world has become even more centralized, because now more of the trading will go to Binance, basically. And also, because of the problems there, it's going to invite more investigation and more regulation. So I think the US in particular, of course, China has banned crypto altogether a long time ago. But the US has been tolerating it because stable coins is the bridge from the cryptocurrency back to the US dollar regime. So in many ways, the crypto world in the last 3 years or so has surrendered to the US dollar regime. So that's why the US, in my humble opinion, has been tolerating the existence of the crypto world. But if they create more problems for them, they will investigate and they will regulate crypto even more. So final word on CBDC. China was a pioneer. We have been experimenting with DCEP for 4 years. But I'm sorry, I'm facts-based, I'm data-driven. So far in 4 years, I think the total transaction volume is like $16 billion. In 1 month, Alipay, and I'm sure similarly for WeChat Pay, they process well over 1 trillion. So with these technologies, if they are really popular, it's bottom up, it's like consumer driven, they would have taken off already. So clearly, there are major technical and other issues, technical challenges to the adoption of CBDC. Again, other countries can try different things, but China by far was on the bleeding edge. And so far, 4 years down, 16 billion total transaction is not a great success story. And I think even Elena pointed out, just because you put something on blockchain, money mostly is digital already. So it's a matter of whether it's on a blockchain or not. And blockchain has its sort of advantages, but it also comes with a lot of baggages. So there's an impossible trinity in the crypto world between energy, efficiency, and security. And it's impossible to balance all three in a perfect way. So it's similar to the impossible trinity in macroeconomics. So there have been numerous examples of such failure, like the Lunar Terra failure. One final word. I know Hong Kong is also trying to explore digital currency, so-called. I think it's a worthwhile effort because Hong Kong is also under threat in case of US sanctions. So I've been thinking about the problem. How do you maintain the peg to the dollar? Is it possible to do it without holding US dollar assets? And Lunar Terra was a second-generation stablecoin which attempted to do that through an algorithmic arbitrage manner. Instead of like US DT or USDC, which are similar to Hong Kong dollar peg, they hold supposedly a lot of high-quality dollar assets to back up the stablecoin. But Lunar Terra was trying to do it in a virtual way, but obviously they failed. I think the failure is not just technical. It's because Do1 and this Terra Lab, whatever, lacks the credibility. So I think actually if we can come up with a third generation stablecoin using the full force of HKMA and maybe PBOC to back it up, maybe that's a way to maintain the peg without holding the US dollar assets. Therefore, maybe possibly making us a little bit less vulnerable to the arbitrary sanctions of the US. But this is at this stage a thought experiment on my part. I've touched upon this in my writing, but I don't think HKMA has followed up on that yet. But I think it's a worthwhile intellectual exercise. Okay, thank you very much.
Thank you, Eddie, for the very interesting discussion. Last but definitely not least, Dr. Stephen Wong is also with us on this panel. He's the Senior Vice President and Executive Director of Public Policy Institute of our Hong Kong Foundation. Stephen received his Bachelor's of Arts in Economics from the University of Chicago and Master of Arts in East Asian Studies from Yale University. He completed his doctorate degree in Public Administration from the University of Hong Kong. Stephen began his career as an investment banker and held regional management positions with several global financial institutions, including as ED at UBS in London and Managing Director at RBS. He's also a member of the Legislative Council. Please welcome Dr. Stephen Wong.
Thank you. I want to focus on my sharing on what is currently being done in using blockchain technology to facilitate cross-border payment and trade documentation in the context of Hong Kong and mainland China, which may have interesting implications for reducing trade barriers within the Belt and Road region, which is what really our topic for this panel. In other words, I want to focus on and explore the cross-border payment as a potential utility of digital currency. An important context is that, as Eddie said, China is, being a key player in the international trade along the Belt and Road. But basically, China has imposed a blanket ban on all types of crypto transactions, including bitcoins and all kinds of stable coins. So in this context, however, Bank of International Settlements, BIS, people call it International Bank of Central Banks, set up various innovation hubs across the globe and has been developing CBDC cross-border prototype, working together with many central banks. So I would like to share 3 examples. The first one is in Hong Kong. Hong Kong has set up its own CBDC project, both on the retail and wholesale level. On the wholesale level, what they call the Enbridge project is particularly relevant to, I guess, our topic of today, which is a platform for CBDC cross-border transaction among corporates and financial institutions. Hong Kong MA and Bank of Thailand initiated this project in 2017, and afterwards, the Central Bank of China and UAE has joined afterwards. The pilot of this Enbridge, not going into detail, has sort of validated proposition that CBDC can substantially increase the speed of cross-border payments from multiple days to nearly real time, and also reduce the cost, as Elena has referred to. I must repeat here, though, that China does adopt a cautious approach towards digital currency, but even being so cautious, they have joined this Enbridge prototype and pilot studies. And I guess this Enbridge is the only overseas cross-border CBDC project that China has joined to handle Enbridge should therefore be a potential platform to handle trade payments along the Belt and Road that we discussed today. At the same time, there are 2 other examples aside from this Enbridge project in Hong Kong. There are 2 other examples I'd like to share with you. One is the BIS has another leading cross-border CBDC project called Project Number. This project brings together Reserve Bank of Australia, Central Bank of Malaysia, Monetary Authority of Singapore, and South Africa Reserve Bank to design multi-CBDC shared settlement platform to test the use of CBDC for international settlements. And the third example I'd like to give it to you is BIS has also concluded a cross-border wholesale CBDC experiment with Bank of France and Swiss National Bank called Project Jura. This project explores settling foreign exchange transactions in euro and Swiss franc on wholesale CBDCs. So these 3 examples are in various, you can call it pilots or prototypes, are in various experimental and developmental stage. And I think this is an interesting space to watch. And aside from digital currency, in our discussions above, CBDC in particular may be an interesting use of blockchain technology in lowering trade barriers. Another use case is for blockchain is trade documentation, which I think eventually may be interesting to anticipate any potential merge of the cross-border payment by CBDC and documentation efficiency by a lot of these blockchain trade platforms in an integrated blockchain platform manner. Given time, I will just jump sort of the conclusion. I think, as you know, some of these e-trade platform by Hong Kong is called the e-trade Connect, which cuts down a lot of documentation processes using blockchain technology. So I guess, as Eddie said, it may be another intellectually interesting exercise or that may be worthy to continue to think about how to integrate this Bridge exercise as well as this e-trade Connect in an operable platform to automate documentation, verification, and payment processing. For example, setting conditional payments on these integrated platforms, which allow payment to be initiated automatically upon the fulfillment of predefined conditions. In this way, the potential of digital currency to lower trade barrier may be able to further extend it and leverage. With all these discussions are still admittedly in experimental phases, but given the global attention and efforts being paid in this space, I think it may be interesting to watch out in this space further. Thank you.
Thank you very much. Now it's Q&A time. Let me see. Before I take on any questions from the floor and from online, I do actually have a few questions to follow up with the panelists. The first question I have is for Elena. If there were a new global currency, how do we actually overcome, having seen what happened with crypto and stablecoin, how do we actually overcome the concern relating to AML and counter-terrorist finance, wearing my lawyers and regulators hat?
Yes, thank you very much for your question. I can answer on this way that it's a good question for lawyers all around the world, because no one knows how we will have to go through KYC and AML without, this hybrid structure. Nowadays, we have no entire currency except a hybrid one, when central bank and other banks participate in the whole structure. So we can't avoid this influence of banks. We can't avoid the influence of those who will just open the door to the blockchain for participants of the overall. In this case, the question of KYC and AML will be on the hands of banking system. In this case, the control will be on the hands of central banks anyway. So it will be question, first of all, whether central banks are going to connect in this global universe platform. I think the answer is no, they can't. They can't be equal on this platform. And without equality, they can't really participate in a global platform, because these are the central banks starting to try to control, starting to capture this control. And it seems for me that it will not be the Central Bank of Russia. It, first of all, will be Federal Reserve System, if I'm not mistaken, because nowadays they try to capture and close even in blockchain of cryptocurrency and Bitcoin. In this case, it seems that the quality of such a platform will be just agreed. And if it works like this, so the question of AML and KYC will be differ very much from state to state, from regulation to regulation. And I think that the global platform today will fail. And to have such a global system, we need something to be changed in a global politics, first of all, not in legal.
Thank you. Do panelists have anything to add? Okay. Okay. I have a question for Eddie. What are the challenges in having a representative international organization such as UN or IMF to lead the development of a truly global currency?
Very good question. I've been thinking, and I have actually written articles suggesting this. I think UN ought to be empowered and not be weakened by the international community. I think this is beyond currency. I think it's just moronic, idiotic, and ultimately self-destructive to still divide our very small planet into 193 countries. We ought to be moving towards some kind of a global, if not government, but much more global coordination in various domains, including currency, including governance, maybe perhaps even in military. So anyway, on the currency issue, like I said, there is a virtual currency already. It's called SDR. It's called Special Drawing Rights. BIS, I guess, in terms of regulator, is, as Stephen says, the central bank to the world central banks. But in terms of actual lending function, actually IMF is the central bank to the central bank. So whenever you see, various EM countries in history getting into trouble, they go to IMF for help. And maybe soon even G7 countries may have to, which shall be unnamed, but they may have to go to IMF for help. But IMF's function is like a central bank. So in that case, why don't they make SDR a global currency? So that is certainly a possibility, I think. And I guess nowadays, if you want to make SDR a real currency, you might as well make it crypto. So you can put it on the blockchain, right? I think that kind of like euro at the beginning, they didn't issue notes and coins yet, right? At the beginning, they already had EMS and then EMU, and then ultimately they issue the cash, which is a smaller part of the money supply. So I would support that. But the problem is that IMF does not have capital raising ability. I think various countries do deposit money with it. That's why they have the special drawing rights. But they have no taxation ability. UN does not tax the world, and they cannot issue global bonds. So without the ability to tax and to issue bonds and such, then they are quite powerless. I think IMF, I forgot what's the size of the balance sheet. I'm 200% sure that their balance sheet is much smaller than the Federal Reserve. The Federal Reserve's balance sheet itself used to be very small. It used to be $700 billion only before the GFC, before 2008. And then it grew to $3 trillion, then fell back to 2, and then it went to 8. And now it's still over 7 trillion. I'm pretty sure IMF's balance sheet is laughably small. So I think conceptually, yes, SDR can be a global currency, but it's not. And I don't see plans from the major powers in the world supporting this plan.
Let's hope time will help us in that direction. There are a couple of questions going through the online audience. This one is for Stephen. The questions are, what are the prospects of yuan becoming a Belt and Road currency or even a global currency? And
that's a question for Eddie. I think I simply laid out what is going on, what are the experiments that is trade-related, that is using blockchain with existing currencies, right? So when I see the title here, quote-unquote, global currency, I take it as you're not inventing, or you can, but what I was trying to say is a lot of interesting experiments going on using technology with existing currencies to cut down on the trade barriers in terms of settlement time, settlement cost, and as well as in terms of trade documentation on the blockchain.
Eddie, do you want to supplement that?
Well, I totally support the internationalization of the yuan be it on the Belt and Road or globally. But as I said, the fundamental problem is not a technology issue. It's not whether it's digital or it's on the blockchain. It's the fact that China seemingly does not want to open its capital account. And when you have a closed capital account, and in fact, I'm sorry to say, but over the last 5 years, let's say, capital controls have been increasing, not decreasing. So it's harder to get money out of China now than 5 years ago. The quota has gone down, actually. So when that is the case, it's simply very difficult for other people around the world, central banks and companies and individuals, to want to hold the renminbi. In fact, if I'm not correct, if I'm not mistaken, even in Hong Kong, where we are the major so-called offshore renminbi trading center, the amount of renminbi deposits in Hong Kong has probably declined by half over the last 10 years. So even in Hong Kong, the amount of renminbi has shrunk instead of increasing. Again, despite the relatively high growth rate of China's economy, at least until last couple of years. So that is a fundamental problem. So I think to address it, you have to think about the opening up the capital accounts, and there's no two ways around it.
Thank you. As a follow-up, question is being asked: should the Hong Kong dollar be pegged to the renminbi, given the U.S. is using increasingly the dollar as a tool in the international stage? Yeah. I know you mentioned about the current accounts issue. I think until and unless this issue is addressed, I think your Hong Kong dollar being pegged to renminbi, would that be attractive? For the yes.
Well, I think under one country, two system, I think one of the fundamental values of Hong Kong is the peg to the dollar. So unfortunately, I think not only capital account, but obviously physical travel to mainland China remains very challenging. Well, even to Hong Kong, we still have some challenges, but 0+3 makes it a little bit more palatable for many people, right? So I think Hong Kong's value, Hong Kong's raison d'etre for 200 years, and remains the case, is because we're slightly different from the mainland. So the Hong Kong dollar peg indeed has served a purpose for the last 40 years plus. And I think fundamentally, as long as the renminbi remains quite closed, the capital account of the mainland remains closed, therefore you need Hong Kong to be more open. You see what I mean? So the peg serves a purpose to the dollar. So if we were to be pegged to the renminbi, then I think we lose part of our raison d'etre in Hong Kong. But I do think that there's a possibility of changing the peg to a basket of currency similar to CFTES, whatever they call it in China, or a little bit similar to Singapore. I think that's worthwhile to think about. But directly pegging to the yuan, I don't think would be the first priority. However, there is a scenario where I can see that, is if the renminbi continues to depreciate and it crosses the 7.8 mark, then maybe we will just, conveniently be dragged along to the yuan. I think it's difficult to imagine, not impossible, to imagine the yuan trading below the Hong Kong dollar. I think there are various issues to that scenario.
From an investor and from an asset management perspective, how would the foreign investors or people with wealth having properties and currencies based in Hong Kong dollar, how would they think if they were to consider renminbi or basket of currency?
I think any change would be traumatic. It's very simple. Investors don't like uncertainty. So any change of regime, be it pegging to the renminbi or to a basket or whatever, the immediate knee-jerk reaction would be pretty significant drop in all asset prices in Hong Kong, including property and stocks, etc. first, and then before rebounding or stabilizing at whatever fair market value there is. So the volatility will be quite tremendous, I would imagine, in such scenario. But I think, unfortunately, Hong Kong and Beijing need to think about these issues, because there are dark clouds looming over us. We can say whatever we want. I mean, like HKMA, obviously, we have enough reserve to back up the Hong Kong dollar. I have no doubt about that, right? It's a 19th century kind of currency board system. So I'm pretty sure we have enough reserve to back up M0, M1, M2. I'm not sure if we have enough US dollar to back it up all the way to, I don't know, M3, M4, M5. I mean, money concept is very abstract nowadays. So that I don't know. But I think, like I said, implied at the beginning, I think we are realistically vulnerable to US sanctions. Like we already see individuals being sanctioned already, major officials in Hong Kong government. But I think institutionally, we are at risk. I don't want to name the risk now. I mean, you can read the newspaper. I mean, the US is quite aggressive. There are meaningful risks to the dollar peg. That's why I said maybe we can explore some kind of algorithmic peg to the dollar. But after the failure of lunar terror, it's not really respectable to suggest that idea anymore. Like to talk about second generation stablecoin makes me sound foolish. So I would call it the third generation. Can we improve upon the second generation? And I think if HKMA and PBOC put their full backing behind such a project, of course they have much more credibility than the fugitive Do Wan, who is hiding. So he's the most hated person in Korea, apparently. But we do have to be careful because, again, just last couple of nights we've seen the collapse, complete collapse of FTX and so on. So crypto may not be the answer to everything, to every problem. But I think for Hong Kong, the urgency is there to find a way out, to find an alternative.
Maybe this is the direction where the think tank, like Stephen, could help guide the government and various bureaus to consider as an alternative. The world is changing. Hong Kong's circumstances are also changing. When you talk about the U.S. Hong Kong dollar pegged to U.S. dollar and how we can evolve potentially into a Hong Kong dollar, I think that's quite attractive, but lots of challenges still.
It's more than putting on a blockchain. The challenge is more fundamental. Ideally, you want to peg it to the dollar. That serves the purpose of the country. But how do you do it without holding US dollar assets or being... the trick is how do you do it? How do you maintain that without being as vulnerable? I cannot say you eliminate all the risk, but how do you minimize the risk of being sanctioned? So that's the challenge. Otherwise, if you really cannot do that, then I think it's conceivable nowadays. I think it is okay to discuss it openly. Is to bite the bullet and think about changing the peg system altogether. So, but then it's hard to imagine that even if you peg it to the basket, that the basket does not include US dollar, or proportionally, I guess it would have to be 60% dollar anyway. So that's a slight improvement to 100% dollar, but still you would still be vulnerable. So something more has to be done, perhaps.
Well, that are all the questions from the online and from myself. And unless there are any more questions on the floor, I would therefore want to say thank you. I hope you all enjoy a valuable session with our distinguished panel of speakers on the designations and use of new global currencies and the Belt and Road initiatives. And on behalf of the Law Society of Hong Kong, I would like to express our immense gratitude to Elena, Eddie, and Stephen. And may I ask you to all join to put your hands together to thank them.
Thank you very much for the valuable insights. I learned a lot about money matters and the global currency. May I now invite Mr. Yu to present souvenirs to our honorable guests. The discussion of session 3 has now come to an end. We will now take a 15-minute break until 3:55. So please enjoy some refreshments in room N206 to N208. Again, for online participants, there's no need to sign out. Thank you.